Welcome to the routine maintenance safe harbor election mini lesson. I'm excited to chat through this content with you today, and let's get started. The routine maintenance safe harbor election allows taxpayers to deduct immediately repairs and maintenance items that might have to be depreciated and set up as a fixed asset and capitalized if certain qualifications are made. So we're going to talk through that. We're going to talk when the election can be made per IRS regulation section 1.263, what important exceptions exist. So there are some exceptions to this safe harbor election. How do you claim the election? Then we're going to always go back to our teaching tax flow aim chart, activity investment matrix chart, and determine what taxpayers would best benefit from this tax strategy and election. And then obviously, we always wrap it up with our calls to action. Now, the safe harbor for routine maintenance, what this election is providing you with was the opportunity to not, and you can see right here in the text, not capitalize as an improvement, yet deduct expenditures that meet these criteria. So it's amounts paid for recurring activities, the property is used in a trade or business. You have to keep the property ordinarily efficient in operating conditions. So the expenditures to make sure that property is in operating condition, and you reasonably expect at the time of the property is placed into service to perform these activities. This is the key. Not more than once, or rather more than once during a 10-year period. So again, there's a lot of intent involved when we're determining what expenditures are eligible for the routine maintenance safe harbor as opposed to having to capitalize and deduct the expenditure. So, again, this is right from the IRS tax code. It talks about facts and circumstances, but use your best judgment to determine if you have expenditures that qualify for the routine maintenance safe harbor. Now, what does not? So there are a couple of big exceptions. One is the betterment exception. So routine maintenance is not a betterment. So a betterment is when you materially improve a property. So you're not maintaining the existing condition of the property. Also, it does not apply to restorations. There would otherwise be improvements, including when you pay amounts to replace a major component or substantial structural part of the unit, a new roof, a heating and cooling system, etc. are examples of restoration. So betterments and restorations are not eligible for this routine maintenance safe harbor election. Now we're going to talk through where to report that. And these, when you're making this election, you report it on a form 3515. We're going to look at that form as well. And we're going to report it as a 481A adjustment. So those are very technical terms within the tax code, but that's how you would report this routine maintenance safe harbor election. Right here is that form 3115. This form will get attached to your tax return. It could be a personal tax return, typically, or it could be a corporation. Right here in the box, you're going to say what type of return in this box are you attaching this 3115, because this is technically an application to change your accounting method and to elect to deduct those routine maintenance costs that are eligible that we already discussed. The routine maintenance safe harbor, we're looking back at that AIM chart. Again, allows immediate deduction for routine maintenance costs, but it does exclude betterments. And we talked about that 10-year rule. When is this election beneficial? Well, if you're a passive investor, sometimes, or a material participant with long-term rentals, sometimes it might make sense. So it's possibly, if you have net rental income or you have passive income that you can offset in the current year. If you're rep status, and we have that, we discussed that in another course, another content, this election will make sense even if you have a long-term rental property. Now, if you're a passive investor and you have a short-term rental property, I'm going to go back to possibly. It depends if you have income to offset it in the current year, but because of the short-term rental loophole, we do cover that in other content, the routine maintenance safe harbor can really benefit you if you're a material participant or a rep status person with a short-term rental property. So you can see right here, we've highlighted what a matrix taxpayer would most benefit from this election. Let's look at our calls to action. First thing, look at your tax return. Figure out if the routine made in safe harbor election would benefit you based on your specific AIM profile. Then, so would you benefit from it financially? Do you have taxable income that's flowing through? Determine if you're eligible. Then if you're eligible, consider making that safe harbor election. Remember, with this election, you're going to file a Form 3115. We looked at that form. Attach it to your tax return, your annual return, and make a 481A adjustment to record those expenditures and take an immediate deduction. All right, that is the routine maintenance safe harbor election mini lesson. Thanks for watching and have an awesome rest of the day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself, everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.